What if I told you that a bank did not die because it failed? What if a perfectly healthy, profitable, and solvent bank was assassinated in broad daylight by the very people hired to protect it? We are living in an era where inflation is eating away at every dollar of your salary, public debt is crushing your children, and job stability is just an illusion. You turn to crypto as an escape, a safe haven. But look closer. Do you think the collapse of Signature Bank or Silicon Valley Bank was just due to poor management? Or was it a carefully calculated move in a much larger conspiracy? A conspiracy to cut the throat of the crypto industry, isolate it from the financial system, and lock you into a digital cage without you even knowing it. This is not a conspiracy theory. This is Operation Choke Point 2.0. And if you are holding any coins, or even just cash in the bank, you are the target. Before we dive into this dark zone, let me know, where are you watching this video from? Check in down in the comments section. And if you are ready to hear the unfiltered truth that the mainstream media dares not speak, hit that subscribe button right now, because what I am about to reveal will completely change how you view the money in your wallet.
To understand this financial murder case today, we have to go back in time to the year 2013, a dark chapter in American financial history that few people mention. Operation Choke Point 1.0. Under the Obama administration, the Department of Justice realized one thing: to destroy an industry they did not like. They did not need to pass a ban through Congress. That would take too long and be too noisy. They just needed to do something much simpler: cut off the cash flow. They targeted gun shops, payday lenders, and adult services. They did not ban gun sales, not at all. They just whispered into the ears of the banks, saying, if you provide services to these businesses, we will consider it a reputational risk, and we will audit you to death. The result? Banks, fearing the power of the FDIC and the DOJ, automatically froze the accounts of thousands of legal businesses. No court orders, no broken laws, just covert coercion. Sound familiar? Now let us fast forward to the year 2023. The target is no longer gun shops. It is crypto. In early 2023, a series of strange events began to unfold. The Federal Reserve, the Office of the Comptroller of the Currency, and the FDIC simultaneously issued joint statements. They did not ban crypto. They just warned banks about high risks when dealing with digital assets. And then, boom, Silvergate Bank collapsed, Silicon Valley Bank collapsed, and the climax was the mysterious death of Signature Bank. Look at how it works. In 2013, they used reputational risk to threaten banks serving the gun industry. In 2023, they used safety and soundness risk to threaten banks serving crypto. The goal is exactly the same: isolate the target from the U.S. banking system. If you cannot move fiat currency into crypto, then crypto dies from lack of oxygen. Sound familiar? The administration does not need to ban Bitcoin. They just need to make owning Bitcoin extremely difficult, expensive, and risky for financial institutions. They are building a firewall around the traditional banking system, and crypto is being pushed to the fringe, into the wilderness of illegality. But the similarity does not stop there. In Operation Choke Point 1.0, the victims had no right to appeal, because everything happened in the shadows, through oral instructions and closed-door calls. And today, in Operation Choke Point 2.0, we see the same thing. There is no law prohibiting banks from opening accounts for crypto companies. But try asking any bank CEO if they dare to open one. The answer is no, because they are afraid of a visit from the Fed. Sound familiar? This is asymmetrical warfare. On one side is the absolute power of the state, with the ability to print money and write the rules of the game. On the other side is free technology, trying to escape control. And Signature Bank was the first victim, sacrificed in this brutal war.
But wait, you might be thinking surely Signature Bank was losing money, making bad investments, and that is why it died. That is what they want you to believe. Here is the shocking truth. Signature Bank was not insolvent at the time it was closed. On that fateful day, Sunday, March 12, 2023, Signature Bank still had more assets than liabilities. True, they suffered a massive bank run on Friday, losing about 20% of total deposits. But by Sunday, the situation had stabilized. They had found a capital injection partner. They absolutely could have opened for business on Monday. So why were they shut down? Look at a special figure, Barney Frank. He's a former congressman, the man who wrote the Dodd-Frank Act, the banking regulation law after the 2008 crisis. And he sat on the board of Signature Bank. Barney Frank himself spoke out saying, "We were closed not because we were bankrupt, but because they wanted to send an anti-crypto message." When the very man who wrote banking laws says his bank was assassinated for political reasons, you know there is a rotten smell here. What mechanism allows them to do this? It is a nuclear button in U.S. financial law that few know about, the Systemic Risk Exception, or SRE. The SRE allows the government to bypass normal rules to save the economy. But in this case, they used the SRE not to save Signature, but to kill it quickly and transfer its assets. But why Signature? Why did they have to kill it immediately on Sunday without waiting for Monday? Because Signature Bank held a weapon, a technology that kept the Federal Reserve up at night, a technology that directly threatened the supreme power of the U.S. dollar. That technology is not Bitcoin. It is not Ethereum. It is an internal payment platform that operates 24/7, 365, allowing instant money transfers without going through the Fed. You won't believe the name, or maybe you have heard it, but never understood its true danger to the financial tycoons. The receipt for the death of Signature Bank is wilder than you think. Hold on tight, because we are about to dissect the terrifying financial mechanism that was activated to strangle this innovation.
Let us talk about the weapon that Signature Bank possessed. Signet. Signet is a blockchain-based payment system that allows clients, mainly crypto companies, to transfer US dollars to each other instantly, regardless of day or night, weekends or holidays. While the traditional U.S. banking system closes at 5 p.m. on Friday and hibernates until Monday morning, Signet operates without rest. Why does this scare the Fed? Because the Fed is preparing to launch FedNow, their own instant payment system, the precursor to a central bank digital currency, or CBDC. Signet is a direct competitor, a private system that is more efficient, faster, and most importantly, it lies outside the direct control of the Fed. To destroy Signet and send a deterrent message, Operation Chokepoint 2.0 activated a chain of brutal financial mechanisms camouflaged under the guise of risk management. Mechanism 1. Weaponized liquidity and the discount window. Banks operate on trust. When people pull money during a bank run, banks need cash fast. Normally, they go to the Fed discount window for a quick loan, collateralized by government bonds. That is the Fed role as the lender of last resort. But for crypto-friendly banks, this door was slammed shut. Shocking statistic number 1. In the fourth quarter of 2022, Signature Bank suffered withdrawals of $17.5 billion. This is a massive number. However, they still stood firm. Shocking statistic number 2. On that dark Friday, Signature tried to borrow money from the Fed to ensure liquidity. But instead of helping, regulators delayed, set up technical barriers, and finally remained silent. Imagine you are drowning. You reach for a life buoy, but the lifeguard stands on the shore, watching you, and says, "Sorry, this life buoy is not for those who play with crypto." That is an engineered collapse. They let the bank die of thirst for liquidity, even though the bank's solvency was sufficient to pay debts. Mechanism 2. The Phantom Deposit Cap. After Signature died, a new unwritten rule appeared. There is no official document, but every bank CEO knows it. Do not hold more than 15 to 20% of total deposits from crypto clients. Shocking statistic number 3. Before collapsing, 20 to 30% of Signature deposits came from the crypto industry. This was a huge source of cheap capital that helped them grow. The brutal reality: by imposing a 15% cap, the FDIC forced other small banks to reject crypto clients. If you are a crypto exchange with $500 million in cash, you can no longer deposit it in a small bank. You are pushed out onto the street. This is parasitic finance at its highest level. Regulators suck the lifeblood out of banks that dare to innovate, forcing them back to the old model, dependent on the Fed. Mechanism 3. The rigged auction. This is the clearest evidence of the conspiracy. When the FDIC took over Signature Bank, they sold its assets to Flagstar Bank. But there was a secret clause in the resale contract. Shocking statistic number 4. This $38 billion deal came with a condition. The buyer, Flagstar, was not allowed to accept any accounts related to crypto. Shocking statistic number 5. About $4 billion in deposits from crypto companies were held back by the FDIC and forced to be returned to customers in the form of paper checks instead of being transferred to the new bank. They cut out the tumor, in their view, which was crypto, from the body of the reborn bank. They killed Signet. That superior 24/7 payment system was shut down permanently. Look at the naked truth. First, they used panic to create a liquidity crisis. Second, they refused bailouts to let the bank collapse. Third, they used the power of the systemic risk exception to seize the bank. Fourth, they sold the bank corpse but kept the crypto part to destroy it. This is not consumer protection. This is the ultimate moral hazard. The government is sending a message. If you dare to build a payment rail competing with the Fed, you will be wiped out. The collapse of Signature Bank was not an accident. It was a public execution to pave the way for FedNow and subsequently CBDC. They want you to use their system where they can track every transaction, every cup of coffee you buy, every donation you make. Signature allowed you to move money unseen at 3 a.m. on a Sunday. FedNow also allows you to do that, but with the comprehensive surveillance of Big Brother. That is the difference between freedom and control. And Signature Bank had to die for choosing the side of freedom.
We are standing on the brink
of a global financial order shift. This modern system is faster, more connected, but also more fragile than ever before. And Operation Choke Point 2.0 is just the beginning. Today, they target crypto. Tomorrow, they could target anything they do not like. Maybe fossil fuel companies, maybe religious organizations, or even your personal account if you have politically unsuitable views. When they can weaponize the banking system to destroy a legal industry without passing laws, then the concept of private property becomes just an illusion. We are living on borrowed time. We are trusting institutions built on lies and manipulation. Denial is the most pleasant opiate. It is very easy to say, "Oh, I do not play crypto, I do not care." But remember, when they control the flow of money, they control your life. Crypto is not just speculation. It is the final effort to separate money from state. And that is why the state is attacking it so furiously. Do not let yourself become the frog in the boiling pot. Stay alert. Diversify your assets. Learn about self-custody. Do not blindly trust any bank or any regulator. Final question for you. Are we wiser now after this deception? Or are we still walking the same old path, just in better suits? If this video awakened something in you, share it. Share your skepticism. And do not forget to hit subscribe, because here we do not accept silence. We seek the truth. See you in the next video, where we will continue to peel back the masks of this financial system.